Hey guys, it's Dan here. It's June 1st, 2012, and NFP non-farm payrolls was just up 69,000, way below expectations. So I'm just going to go over a few little market plays here in the next couple months to the end of the year. In my opinion, what you should be looking for in this market. And I've been telling my dad this a lot. You really need to focus on capital preservation. It's not about really growing your wealth here in this time. I mean, when job prospects are the way they are, Europe is in an abysmal situation. You have Greece that's on the edge of a precipice. It's going to leave the euro, in my opinion, and the EU. Um, you have Spain, which is going to be in the headlines after Greece. You have Italy as well. That looks pretty abysmal. Ireland. I mean, you have a lot of problems here in Europe that are affecting us. So if you can, try to preserve your capital as much as possible, and that means going defensive. I like Walmart. I like since oil is down quite a bit since its highs. I really like the BP play. If you can get BP for around $33 a share, go ahead and go for it. I like Walmart for one because it pays a high yield. It's 4.6% dividend or whatever. I mean you can't really get that with a 10-year Treasury, which is now at 1.45%. I mean that's atrocious. I don't know why people are doing it, but people are giving their money away essentially, and allowing them to take their money. I mean, it's a negative real interest rate. It's negative yield. It's the 1.45 minus whatever inflation is, which is 2 to 3% right now. At least that's what they say. Um, so yeah. Anyways, there's a couple good areas you can look into. I really like commodities, gold and silver particularly. It's They've been hammered this last month, so gold's a good play, silver's a good play. Try to stay away from the ETFs of gold and silver, the GLD, SLV ones, particularly because there's a lot of questions surrounding if that's a viable ETF, because there's a lot of people that believe they loan their gold and silver out. So just try to stay away from that, because if it push does come to shove and it is found out that they don't have the gold and silver on supply, then there's a good chance that could go down the tubes. But I like a couple miners in particular. I like Silvercorp Metals, which has quite a few mines in China. Um, I think it's the Jing mining district. They're a Canadian miner though, so they're the first North American miner in China. They have very low debt. They have pretty copious amounts of silver on supply underground that they're mining. I think it's around 65 million ounces of silver. Um, and then also I like Kinross Gold. I think that's going to be the next Gold Corp, the next Barrick. It's going to be the next big guy in the room. So they're a good company to buy. I also like Gold Corp, Barrick, and Newmont. I mean, at these valuations, you have to. I mean, if you can, you have to pick them up. They all pay dividends. So does Silvercorp. Um, and long-term prospects, they're very attractive. And long-term is anywhere, in my opinion, from 6 months to a couple years, because um, you just don't know anymore. But short-term trade, if you want to get out of European exposure, I like Jim Cramer's pick of Dean Foods. It's all American. They have a couple health plays in line, such as the soy milk, and they benefit from lower oil costs. Oil's at $83 a barrel now, or around there, and they benefit from that play, because a lot of their products are housed in plastic bottles, and it takes a lot of petroleum derivatives to really fix their products, and as well as transportation costs. So that's probably one of their biggest costs. But yeah, I like Dean Foods. It's around 15.50 right now. So put in a stink bid for 15.25, 15.30. See what happens. I think that's a good. My play for the rest of the year. And then also, as in addition to commodities, I also like some energy plays. I think natural gas has a lot of long-term prospects, especially because people are looking for cleaner energy. It's, it is a little cleaner, and America has tons of it. We have tons of it in our backyard, and it would be whatever presidential candidate really takes advantage of it would do himself a favor, because there's so many jobs to be had in that market, and it's trading at 10-year lows now. But yeah, other than that, I would really try to stay away from financials. Don't buy any financials if you can, as much as possible. Stay away from financials, because you just don't know how Europe's going to affect it. And by the way, when Europe's clear and done and dusted, and America's not out of this. The dollar, of course, the dollar index is at 83. Don't believe that we're the strongest country here. We're just by default. Europeans put their money into dollars because it's the only next best thing. It's sort of like the lesser of two evils. Don't believe that we're out of this by any stretch of the means. This is my opinion for the short term 2 to 3 6 month trade, to get you out of the exposure of Europe. Stay away from financials. That's my bottom line. And look at commodities, because you can. I think gold's going higher to 2,000 in the next 12 to 15 months. Silver is probably likely going up to 50. So if you can, look at what you can get here. And in addition to those miners, I also like having physical on hand. So that way you diversify yourself as much as possible. And there's something called silversaver.com, where you can actually trade. You can buy silver and gold, and you can sell it back to them. And it's allocated accounts. They aren't pooled accounts like some of these other these gold inventories, where it's a 1,000 ounce bar and you own 10 grains of it. Okay, well, if excuse my French here, if shit hits the fan, how are you going to allocate it? That's the only problem here at Silver Saver, that uses the Delaware Depository as its inventory. You actually you get you get physical ounces of 1 ounce Eagles and Canadian maple leaves, and you can actually have those delivered. So look at silversaver.com if you want to diversify yourself as much as possible. So bottom line, in summary, there's opportunities to be had in commodities, energy, and some of the defensive stocks like Walmart. I like the BP buy if you can get it for under 35. And Dean Foons, that's another good buy. So really, this is about capital preservation. It's not about growing your wealth here in this time. It's about preserving it and getting a decent yield, possibly while doing it. There's one other, Calime, a master limited partnership. That's another good buy. They're a little high right now. They're 22 a share. I like to see them come under 20 before I initiate a buy signal on them. But anyways, that's my market update for June 1st, 2012. Hopefully you guys take my advice, and if you have any questions or comments or concerns, just go ahead and write me, and I'll try and answer it. All right, thanks guys. Bye.